We are in danger. The UAE property market has always felt like a roller coaster. And if you look at this chart from the Financial Times, you'll see exactly what I mean. From post-2008 crashes to COVID rebounds to today's of-funds frenzy, it's been a wild ride. So the big question is, are we heading for a crash again? Is there going to be a correction, or are the prices just going to go up? In this video, I'm breaking down the updated truth about the UAE real estate market, my honest views as an investor in the property market in Dubai, and we'll see whether or not we're in a bubble, what signs investors should be watching, and what you can do to protect your capital and make smarter moves. Smash the thumbs up button and let's get into it. The UAE market has a very volatile history. Dubai and the UAE in general are no strangers to the market cycles. In 2008, the market plumbed by over 50% in some areas. By 2011 and 2013, the prices went back up again with newer international market demand. Then came another soft dip pre-COVID, and post-COVID, you all know it, a massive surge. According to Financial Times, the prices in Dubai have increased by over 30% from 2020. That was mainly fueled by the surge in the international investment demand, especially from areas that are way more affected from economic cycles, such as the war in Ukraine and Russia, such as some other conflicts in the Middle East. Great golden visa incentives that were implemented by the UAE government, and that definitely made it more appealing, and a better long-term vision for the investors who are now granted 10-year investor visas. And also global inflation that was pushing the global investors to harder assets. But now that the initial post-COVID buzz has cooled, what's happening next? First question, which all of you have, and I personally have as well, are we in a bubble? Well, let's see what makes a bubble and what are the signs of it. Because first of all, we need to see if there is speculative behavior to consider that we have some stronger signs of being in a bubble. Off-fund prices, as many times mentioned in my past videos, are surpassing by 20 to 30% the ready market prices. Developers are launching projects at some incredibly unrealistic rates, as in too many every single week. Buyers are flocking into 5 to 7 year payment plans, many with the idea that they want to flip very quickly post-purchase. Yet, we're not in full-blown bubble territory yet. And why is that? Loan-to-value ratios remain low comparing to 2008. There is less leverage and less bank exposure. Although you can see that so many are getting mortgages and so on, it's still harder to get that, and definitely not as much as it was happening in 2008, which was driven by that in the United States. The buyer pool is also more diverse and more mature. Not just speculators, but real end users with their families wanting to live in that townhouse that they're purchasing in an off-plan and are actually not really looking to flip it over in the next few years or just before handover. So it's inflated, but not necessarily a house of cards that will fall apart. Here's the current situation for demand and supply. Rental demand is extremely high, and I personally believe that it will continue to be so, with at least 200 to 250,000 new residents coming in every year. That makes the population inflow very, very strong and continuing to be so. More professionals and with their families are relocating monthly. Visa reforms are also making it easier and more flexible to stay long terms. Even for us, the citizens of Moldova, we are now receiving the visa waiver, which is really, really good for those who are non-residents and simply want to travel to Dubai, explore the market, and hopefully potentially buy something in the future. But one thing which I can note is that the buying demand has cooled off. And if you don't agree with that, then just check the numbers on DXB Interact, ask the agents around, the real ones that they know the market, or just simply let's have a discussion in the comments below, and we'll see that most people who are buying right now, also from my own advisory clients, are actual end users. Most of those who wanted to buy anyway did so post-COVID, and the flippers were mainly present in that period of time. We're not seeing the same mad rush. Developers, on the other side, are trying to keep the party going with flexible payment plans and branded residences whatsoever, but they are facing a more mature and cautious investor base. As I've said in many of other videos, the ready properties nowadays are the actual cash cows. Airbnb potentially is strong in the right areas, and long-term rentals are setting record highs, and there are so many international people who are moving to Dubai, and they're actually willing to pay in one check or two checks, which makes it a very good investment payback for you as a landlord. Meanwhile, the offline units come with uncertain completion dates and delays. No immediate income, which is the most important point that everyone forgets, because if you're waiting for 2, 3, 4, and even longer years, then you're losing the potential rental income, and you need to take this into consideration. That's why I always say that the developers need to price the off-plan projects correctly. There are also higher launch prices and very tricky resale terms, with 60 to even 70% of the payment to be completed before you are actually allowed to resell this project, which, I mean, it's fine, I guess, but it makes it very difficult if somehow you ended up in a bad situation and you really needed that liquidity. If you are investing now, just make sure you're not just buying a brochure. You're buying an asset with real return potential, and you're locking your money into something. So you need to get a good return, not just tell your friends from back home that you own a property in Dubai. This is not cool anymore. Now let's talk about some scenarios that could trigger a price drop. First of all, I don't really see a huge price correction, at least overall, in Dubai and the UAE market. And that's not because I'm biased whatsoever. I'm not. I have my investments, I buy them and sell them, and I tell the clients that there are areas where you really don't need to invest and the prices will go down. And that is the exact point that I'm trying to make here, because I do see some of the prices going down, and I see some huge corrections in those areas that were really hyped to the buyers, and they were just buying blindly, and then they are getting into distress deals, as in distress sales, because they cannot complete with the payment plans. They don't have the money to make it work somehow, or they're simply in that situation where they need to pay the 60% before they can resell, and they don't have that. That's why I think in some of the areas that are not as in trend, for example, in non-community areas, you might see more price drops and corrections. Most of the communities, although, are being purchased by the end users. That's why I don't really see any corrections there, because the people who buy there will actually leave there, so they have not really a incentive to sell it or to be in distress, because they actually planned it for themselves and they know what to expect, and they won't really, at least in most of the cases, end up in such a situation where they have to sell quickly. The other thing is the global recession. If the US or Europe enters a major slowdown way worse than the Trump tariffs, Dubai and actually anyone else will obviously feel it. While Dubai is a safer area and many people invest here just to preserve their capital, there still could be less capital inflow because they might be affected in their own home countries. Another scenario that might trigger this drop is the overdevelopment. If that is not somehow regulated, then you might see much more supply in some of the areas that are actually not really favored by the end users and only by the flippers. And of course, the flipper will continue to flip. And to that point where the price is too high to actually be flipped. And that's when you're actually looking at your buyer being an end user. And if the end users don't favor those areas and they want to live, let's say, in an MR community, then you're in a very bad position. Regional instability could also dampen the investor confidence and mindset. That's why that is also a point that could trigger this. However, I don't really personally see so, because most of the times when this happens, there are actually more investors coming from nearby countries such as Lebanon and even Israel to buy something here safer and preserve their capital. There might be some interest rate pressure as well. If the UAE borrowing costs go up again, affordability decreases, especially for residents that are looking into the mortgages space. There are also thousands and plenty of rental regulations here locally. Any sharp rent cap laws or tenant protection rules can also influence the investor's mentality and maybe pull them out of some deals. On the brighter note, I don't really see this happening because most of the times when news come to Dubai and there is new laws being implemented, they're actually really good for both sides. The landlord and the tenant both are in a very good, very safe and protected position. So I actually look at this quite in a positive way, and I'm quite excited to see new rules that will help us and foster our investments. But this is a legit scenario. It could happen. It could impact someone. So these were the main things that I personally see as an investor in Dubai. Now, on the bright side, while prices may still stay strong, Dubai's global brand, well, let's agree it's stronger than ever. COP28, international forums, and tax legislation is making Dubai a very attractive place. And now everyone accepts that. There is smart infrastructure investment. There is the amazing government who's doing everything for their residents, and I'm forever grateful for that. New laws are usually better and actually helping you as a resident, which is so different and strange to me when you compare it to Europe. When new laws come up, you're most probably in a worsened situation. Also, the dollar peg, as in the dirham being pegged to the dollar, makes Dubai a much more safer place to invest because your price volatility won't really happen. You're only pegged to the dollar. And of course, if the dollar gets affected, if there are any other Trump tariffs or whatsoever that might affect the dollar, then yes, the residents and the investors in Dubai might feel it. However, the dollar is still very strong, and I don't really see this really impacting this market. Definitely in some other countries where the currency is much more volatile and unstable, but not in Dubai. Now, what should investors do? If we speak about the UAE property prices crashing, well, that's not really accurate. It won't necessarily happen. Maybe not even a correction. Although a correction is absolutely possible, but not everywhere, just in separate specific segments of the market. If you are investing now, then definitely focus on rental-ready assets that will slowly but surely appreciate in value, but definitely will bring you much more ROI in yields from the rental. Be cautious of overhyped property launches and try to be in the right mindset. Don't get diluted by brands and collaborations that the developers do. These are nice. I agree with them. Some of the collaborations the developers do are actually pretty cool, but of course, this is all marketing. This is all to brainwash you to buy more and more. So while I don't say this is a bad strategy, is a very, very good strategy to capture attention. On the other side, as an investor, you just need to be cautious, do your due diligence, and know when and what to buy. Compare secondary market prices before buying anything, and even compare the current sales in one specific project. Just go to DXB Interact and check what were the actual sales for that specific project, unit type, and size. Dubai is still one of the most exciting places to invest in 2025 and is definitely my #1 favorite place. Just make sure you play the long game, not the hype game. Let me know your thoughts in the comments below. Do you agree with this analysis? Or maybe you have some other points that I missed or you just want to discuss with me. As always, don't forget to like this video if you actually enjoyed it and subscribe to see more in the future. And with this, I will see you in the next one.